toll free at 1-877-927-6648. This is the Futures Hour.
Okay, folks, good morning. This is Larry Pesavento for the Futures Hour for TFNN. If you have any calls, it's 877-927-6648. And I believe the first order of business today, we should discuss the lunar cycle that we've been talking about in stocks for quite a while now. And we definitely have a failure. We were suspecting that it was probably going to fail because it had already broken in the Dow Jones, the NASDAQ, and the Russell. It was only the New York Stock Exchange Index that had held. And then today, with the positive jobs report, they popped it up quite a bit. So that cycle has failed. And the reason why it's failed is this is the seventh day, and the 5 day, 3 days is an absolute maximum. Once in a great while, there might be a 5 day orb where the market just stays there and doesn't do very much. But to make a new high after the high on Friday, that definitely tells us that this cycle has failed. That doesn't mean it's a bad cycle, folks. This thing has been spot on 6 times in a row, and if you look at the probabilities over, the past couple hundred years, it puts the odds very heavily in your favor. So all we're saying is that there's probably something else that's out there. It might be the aspect that's out there for July 18th. It might be something even bigger than that. We don't really know, but there's a lot of power here right now. The Dow Jones Transportations may have made new highs, as have the utilities. Above the May high, so you must respect that. So all we're going to wait now is to see, what the next pattern does to unfold. Well, the only thing that we've done today is we've hit the 786 level in the S&P 500, and we're still quite a ways away from that on the New York Stock Exchange Index. But frankly, this cycle has basically just not worked. If you look at it and go back since February, it's been within 1 day of the exact high or low. And so I think you can say with a great deal of confidence that it just didn't work this time. And we've been saying, that usually after 3 cycles, you should expect maybe it not to work. And we went all the way out to, 6 events before it finally failed on the 7th time. So that's something that we'll have to, I'm not going to search about why it failed because I'll probably never know that answer. I'm not really concerned about that. I just want to know, that it did fail, and that gives me some information that, I'll be ready for the next one, because there might be 3 or 4 failures in a row before we have another situation where we go 5 or 6, cycles in a row where it works perfectly. It's all probability based. That's all that it really is. Since this is the commodity hour, I really think we need to talk a little bit about the corn market, because corn is in a situation where we've had this very negative report that occurred last week, and the markets for corn and beans and wheat have made some, very substantial bottoms, and I think we're, getting ready to have some really strong markets to the upside. In particular, we've had a huge move in the rice contract. I know most people have never traded rice before, but it is actually a very good indicator of food supplies in the world, because most people eat rice in the world as opposed to bread and corn and stuff like that. Especially, corn is basically used for feed for cattle and hogs and chickens, and it's really a rice is the consuming food of the world. It's the largest food supply in the world. And when we were bringing this up last week during the time when we had this tremendous negative report that came out that basically said, we had more corn than we're ever going to be able to use, which was total baloney. And rice, on the other hand, has had a pretty substantial crop failure in Korea, and that is what's caused this huge move that we've experienced since the end of June. It's been up in the last 7 days. The rice contract has jumped more than $10,000. That's a huge amount of money on a margin of only $2,500. So that's something that it's telling us that these prices in some of these foods are probably way underpriced, even though at historically high levels, because supplies are so low and demand is so strong. Because the rest of the economies of the world are actually doing okay, it's keeping these prices relatively high. I think our strategy on corn, we've been watching that for several weeks now, for the pullback to come in to corn. It came into the exact 786 off of the March low, and that brought us into that 585 level. We're now trading at around 618. So it's moved up about 30 cents, which is around $1,500. So if we get a pullback of about 25% in 25 or 20 cents in the corn, I would be looking to possibly be a buyer in that. That would put corn down around the 5.98 level per bushel, and the risk there would be about 12 to 15 cents per bushel. This basically puts you in as a farmer for around $700-800. You literally have your own tractors and your fields and your corn and everything else, your seed, but you don't have to suffer through all the other stuff that the regular farmer has to go through, the weather and all the other things. The good part about being a futures trader is that you have all the benefits of being a farmer, except one, and that is the price of land. And believe me, the price of farmland in the Midwest has really gone quite high recently because of these food prices being levels where they are. When I first started trading commodities, way back in the 60s, that's the 1960s, not 1860s. The market always had a joke about beans in the teens, because in 1972, during the Russian grain robbery, soybeans hit $12.90 a bushel, and that held for almost 35 years before we finally went above $13 per bushel. And we peaked at $16 and change in the 2008 run-up. So the beans in the teens has always been something that had been talked about, and now we're there all the time. So prices at these levels might stay here for a great deal of time, and they might also, not stay here. But all I'm saying is that the overall situation in the grain markets now, we've had the correction that we wanted. They've started up. Buy any pullback that you can get. If you get a 61% pullback off of any move, that's what we're looking at in corn or soybeans. Any of these they're looking tremendously bullish. We've made major Gartley patterns at these things, and this is why it's so interesting that we have these things working the way that they are. They're all working in unison, telling us that the whole world is wanting to buy some of our food. And if we have any crop failure at all, and this is what we've been saying many times now, is that we don't go through a season without at least one crop failure. This is only the 7th of July. And so what I'm expecting is we're going to get at least one or two, either droughts or too much rain or something that goes crazy with the market, and you'll have these tremendous bull moves during the growing season. I cannot think of any year since I've been trading where we didn't have at least one or two crop scares, during the year. The question is that you must get in at a relatively a good spot. And the places we were looking at last week, we hit a really nice spot in soybeans. We hit a really nice spot in wheat. Soybeans have moved up over 60 cents a bushel, which is around $3,000. Wheat's moved up very little from the level, but rice has gone crazy. Corn's moved up about $1,500, but wheat is still a viable place to buy in here. I'm going to put a chart into the den today. If you get a chance to come into the den, if you happen to be traveling and not being able to see it, but if you'll go in and take a look at the chart for wheat, you'll see that we have reached a very important 618 level at that $6.07 a bushel level, and we've only rallied about 12 or 15 cents off the bottom. So wheat is still at a relatively low price compared to rice and corn and soybeans. So this would be the one that you might want to keep an eye on if you're interested in participating in what I think is going to be another leg up in these grains, at least for the coming season. That doesn't mean they're going to go up and make new highs, on contractual basis. In other words, new contract highs. I'm not saying that. I'm just saying we should get one or two really good weather scares that would give us a very good opportunity, to be looking at. These patterns have completed in unison, and this is another, positive sign. This tells us that this cycle that we were looking at into the July 5th weekend has filled its purpose and has told us that, yes, that bottom is very important. And should we go below that bottom, then all bets would be off, and then we'd be looking at something that would be a little more sinister to the downside. There's some ETFs for some of these things. One of them is DBA, which is an ETF for, I believe, wheat, corn, soybeans, and cattle, and a whole bunch of other things. And I don't recommend ETFs because I think if you use some good, money management, like not risk more than $500 to $1,000 on one of these contracts that you certainly, gives you a better chance. You have great margin. Remember the difference between the margins that we have in the Forex markets, where they're giving you 100 to 1 and 200 to 1 margin, and the futures markets, is the futures markets give you a maximum of about 20 to 1, around 5%. So if you're trading in the Forex market, remember you're trading against other Forex banks and other Forex traders in a non-regulated exchange. When you're trading with the futures market, you're basically doing an exchange that is regulated by the CFTC and the NFA, along with the SEC, which the SEC is really insignificant for futures, but they're still there. That's why when you open a commodity account, that's one of your most safest places you can put your money during times of turmoil. The reason for that is the clearing members always want to make sure that their backs are covered. We've talked about this many times, but in the pecking order of what's important when you have an exchange, the first is the integrity of the exchange itself. The second is the clearing members of the exchange. These are members of the exchange that have clearing operations in the brokerage houses. The third are the members themselves, and fourth, and finally, would be us. We would be the customers. But believe me, they're double covered everywhere. So for every long, there's got to be a short, and the margins have to be the same. So, and any time these prices go crazy, they change the margins. If you remember, this is what happened in silver when silver was topping. We kept screaming at folks saying, be real careful here at this $45 level in silver, because they were raising the margin. Open interest was dropping, means people were leaving the market, but people didn't pay too much attention. We've got a call from Fort Lauderdale, Florida. Are you there, please?
Yeah, I'm here. Hi.
Yes, sir. What can I do for you?
Okay, I was wondering what your thinking is towards oil. The /CL is what I'm watching for the oil.
Yes, that's the spot market for West Texas crude, and once it went above the $96 a barrel level, I focused on that in the newsletter this week, because we had stopped at the 95 level and broke down rapidly, and then once we went back above that old supply level at 95, that told us that we were heading much higher. And I think the next level that it'll have a little bit of trouble with will be the $100 a barrel level. And then I'm expecting a little bit of a pullback here, because we've gone from $90 a barrel to $100 a barrel basically nonstop. So if we could back off about $6 a barrel to that 94 level, I would be looking to be a buyer of oil around 94 or 95 with a stop below that 90 level.
Larry,
but I think it looks like we're going higher. We've got to do a commercial here. If you'll stay with me,
sure.
I want to cover one other thing about the oil. It's 877-927-6648. Please hang on, please.
I will.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. You've heard Bud Rolfs give his expert technical analysis of the stock market on the radio. Now you can have his superior trading advice and his best stock picks delivered right to your desktop every week with his newsletter, The Torch. Using his own trademarked Warpath trading system, Bud will help you to increase your odds of making and saving money in the markets with powerful stock selection, stock analysis, and trading plan strategies. Published every Monday morning, each issue of The Torch features full-color charts in an easy-to-follow format. You will also receive not only the big picture of what's going on in the major markets and critical sectors, but also featured stock picks with complete trading plans and technical setups, as well as the Subscribers Corner, where Bud analyzes stocks submitted by subscribers. Visit TFNN.com today and receive your 2-week free trial of The Torch. That's a $75 value. Sign up now and make sure you receive all the great market analysis and winning trade ideas in every action-packed issue of The Torch from Bud Rolfs.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, Forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back. If you have any questions, it's 877-927-6648, and we're on with Rico from Fort Lauderdale. Are you still there, my friend?
I'm here.
Okay,
Larry,
now,
when you were speaking about a time frame, I'm just asking you this question before I forget.
Okay.
You spoke that we could be tracing back to 94 because we just had a couple days of good pops. What kind of time frame are you looking possibly?
Well, I look at sequences, Rico. In other words, we've been in a sequence now of 8 days up in crude oil since we bottomed towards the end of June, and this is our 8th day up. In other words, we've had higher highs or higher lows all the way up into this time frame. So I'm looking in sequences of, since we're 8 days higher, the Fibonacci numbers off of 8 are 5 and 3, so I'd be looking at 3 days down or 5 days down. If the market's really bullish, it'll only give you 3 days down, and it might only just retrace to the 382 level. That would take you into about the 95 level, which was the old breakout level. When it broke down below 95, which was the 618 retracement, it went right down to the 786, exactly at $90 a barrel. It stayed there 3 days in a row, and now we've broken above it. So if it pulls back to the 95, it sets up a situation where you're going back to what old resistance and support used to be. So you know that if you buy it around that 95 level, you don't have to risk a whole lot because it should hold that level. But I'm looking at somewhere between 3 and 5 days down, and usually after 8 days up, you'll get 3 to 5 days down. That's a statistic. That's not that's not etched in stone. All of this is probability based.
Sure.
Okay. Okay.
Yeah.
Well, I'll be following it, and I'm certainly going to be talking about it on Monday's show. But we should have really strong support here at the $95 a barrel level if we back off here in oil, and there should be a little bit of resistance at that $100 because $100 a barrel is the 786 coming off of the late May high, and so that should give it a little bit of resistance, especially since you're up 8 days in a row. Okay?
And you had a point you were going to make also, you said.
Well, all I was going to say is the fact that, we since we've hit that $90 a barrel level at the 786, and we hit it 4 days in a row and have rallied up, really strongly for 8 days, we could literally, if this thing gets some type of a war thing or a disruption of supplies, you could get a really wide move in oil of $4, $5, $6 in 1 day, and then you would set up a move that would take us probably up to the 117, 118 level. So this is still early. I mean, the market has been bullish. It stopped exactly at the 786, and when it was doing that, gold was stopping exactly at 1480, and silver was at 3350. All of these were coming together at the same time, and this is the time when corn was, down, when it was making its low. So many of these commodities have hit a pretty strong cycle low in early July, and we have to respect that and try to make some money off of it.
You sound strong and healthy today. Good. That's good. You sound.
At my age, every day above ground's a good day, but I'm doing okay.
Well, your voice pattern's strong.
Oh, thank you. Some days are better than others, but I'm feeling pretty good today.
Okay, great. Keep it going.
Okay, thanks a lot, Rico. We have a call from Ben in Tallahassee. Are you there, Ben?
Hi, Larry. How are you doing?
I'm good, Ben. What can I do for you?
Excellent. Thank you. Correct me if I'm wrong, but I think you said that if we were up strong today in the market, and it being a P-index time frame, that most likely it nulled the bearish viewpoint. And I guess that's my first question. If that's true, do you, and I would think that at some point here we'll get some kind of retracement. Would you now say that, again, if that is true, would you say that you would be a buyer of the next pullback, or would you still view the market from a bearish sentiment?
Well, it's pretty hard to view. What I was talking about as the failure is the fact that the lunar cycle that we looked at, it only has an orb of 1 day on either side of the event, and the event actually occurred on July the 1st, which was the solar eclipse and new moon, and we actually held that level all through yesterday in the New York Stock Exchange Index. But today, the NYS index actually jumped, a lot higher, and gapped up, and it's really hard to be bullish here or bearish here when you have a new highs in the transportation and you have a new high in utility index. The only thing that I can see bearish in the market is the fact that the S&Ps have gone up to the 786 level. They've done it 8-9 days in a row without any correction, and the technical pattern in the New York Stock Exchange Index is a perfect head and shoulders bearish pattern from the February left shoulder to the high in the new moon on May the 2nd, and the other shoulder. I'm going to post that into the den, and if you get a chance to go to the chart and look at the New York Stock Exchange Index, because it is making a perfect head and shoulders. I'll answer the second part of the question when we come back, if you'll hold on, please. 877-927-6648.
Hi folks, this is Tom O'Brien. To help you celebrate your trading independence during the month of July, we are offering you a unique opportunity to get all of the TFNN outstanding products at a substantial discount and to receive access to an exclusive webinar that you can only get with this offer. If you purchase Tiger Dollars during July, you will automatically be registered to attend my live webinar at no extra charge. During this one-day webinar, you'll spend 5 hours in the TFNN virtual classroom learning the 5 primary fundamental core techniques to become a master trader. The live one-day webinar, 5 primary fundamental core techniques to become a master trader, will be held on Monday, August 8th from 10 a.m. to 3 p.m. If you're unable to attend the live webinar, the course will be archived on your members page for you to view at your convenience. Outstanding TFNN products at substantial discounts with a free webinar. Now that's a great way to celebrate your trading independence. Go to the Tiger store and purchase your Tiger Dollars now.
Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
Now we have our winner, William Lorman from Wilmington, Mass. William, thank you so much. Congratulations.
Hi, Tom. Thank you very much.
It's a beautiful thing, man.
Oh, we've got Jason Spears. Congratulations. You are the winner of the Great Panther Silver giveaway here at TFNN. I'm so pleased you called in. Made my day.
Well, thank you. Thank you very much.
Through Labor Day, TFNN will hold a drawing once a day, 5 days a week, business days only. One lucky entrant will receive one of these beautiful coins.
Right now, we have our winner, Joe Picararo from Wakefield, Mass. Congratulations.
Oh, yeah. Hey, long-term fan, listened a long time. So, yeah, big fan.
I know that voice, man. That's a beautiful thing. That's a beautiful thing, man.
Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks. Go to the front page of TFNN.com for more information. Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York Stock Exchanges under the symbol GBG.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Now, back to the Futures Hour.
Okay, folks, it's 877-927-6648. Ben, are you still with us from Tallahassee?
Yes, Larry.
Okay, one of the things I wanted to try to answer, you had a question about the SPY, the cash S&P, and we've left a huge gap today. I posted it in the den. We closed at 134 and change yesterday, and we gapped up above 135 today. And if you go back and look at your chart on the SPY, you'll see that it never leaves a gap. All these gaps will be filled. So if you're looking for a place to to go long, which, that's certainly a possibility if that's what you'd like to do. Watch for a pullback into that gap where you don't have to risk very much. But, it's real difficult to buy strength like this, especially when you're up, 8 days in a row in the market and you leave a big gap. That's an exhaustion type move, in my opinion, and we'll just have to wait and see. The cash S&P hit the exact 786 number at 1350. So that was off of the May high. So if you'll just keep an eye on that gap in the cash S&P, that would give you an idea of where it might be a low risk entry point if you want to be long stocks in here.
Yeah,
and I'm not sure that's the way to be, but that's if you do want to go long, that might be a place to look at it.
Yeah, I guess that's why I correlated the question to the P-index data. I thought maybe if you considered the P-index a failure today, then maybe on a retracement, it'd be a good time to buy. That was kind of where I was going.
Well, there's one slight problem with the P-index data, and the way that they've fixed the ephemeris. In other words, the way they're producing data for the ephemeris, they're including some things that have not usually been included before. And when you look at it, there actually seems to be more aspects than there actually are. So you have to take out some of these things that the Chiron and a few of the other things that the traditional astrologers use that I don't use. Thankfully, Steve Rhodes at TFNN brought this to my attention. But the fact is that the July 5th, actually is not a P-index date. It's only 12 aspects, and we actually need 14. But when you look at the ephemeris, it looks like, there's more than 16 or 17 there. So, and in fact, there's a lot of things happening, but it's officially not a P-index date. The thing that I'm watching more than anything else is that we've made new highs in the transports. We've made new highs in the utilities. I'm not over any big cycle date after that July 1st level up until, July 18th. There's a minor one that happened with 12 aspects that occurred on Tuesday. But, frankly, it doesn't act like it wants to back off. I can't buy it here because you gapped up after 8 days. I mean, that's the number of times you're going to make money on that is going to be 1 time out of 10. So just be patient, and it'll give you a chance to buy it.
Great. Hey, Larry, thank you very much. Great job.
Thank you. I hope that helps. One of the things when you do this business, Ben, you've got to realize that when you're wrong, you try to find out the reasons why you're wrong, just because of to know what happens the next time it occurs and how you react to it. The one thing you don't want to do is if you're in a position and you have an opinion about something. Paul Tudor Jones says, lose your opinion instead of your money, and that's true. It's much easier to change your opinion than to change your checkbook. So be sure that don't get stuck in something that you think it's going to go down, and the reason for it is whatever it happens to be. Because markets are seldom wrong. Men often are. So I hope that helps. Okay, one of the things we have a commercial. I have something very important to discuss next. It's about market manipulation and my opinion of it. And believe me, it's my opinion, but I'll be back after the break. It's 877-927-6648.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted that was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, Forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Now, back to the Futures Hour.
Okay, folks, this is Larry Pesavento on the Futures Hour, 877-927-6648. And I have to get on my soapbox for just a few minutes here. I received a inquiry about the market manipulation. And I do not believe that markets are manipulated on a long-term basis. They can be moved around a little bit on a short-term basis. But on a longer-term basis, I have not seen any instance of that in my 200 years of studying the market. I haven't been, around that long, but in 50 years of studying 200 years of stock market data, I can find no instances of where I've seen outright manipulation. Let me give you a perfect example. During the crash into 2008, 2009, they brought out the TARP and all the bailout stuff occurred in October of 2008, yet the market did not bottom until those major cycles bottomed on March the 5th of 2009, and that was one that we were looking at to be, the mother of all short covering rallies, which it's lasted, 27 months. But these markets are natural moving things because it's measuring fear and greed. I don't believe they're manipulated. The Fed and other central banks can come in and do transactions to help stabilize the market or, calm the fears and stuff like that. But for longer term things, these are based on normal cycles of supply and demand that have been around for ever since our planet has started. So that's a non-negotiable one, folks. You can argue with me about a lot of things, but that one I will go to my grave on that one, saying that it is not it's not something that we can negotiate. These markets are not manipulated. They can be moved around a little bit for short periods of time, but for longer-term things, I'm talking about a week or more, these things are going to go back to where they're supposed to be trading. I think that's very, very important. I'm going to show one more example about that, and that comes from my good friend Jim Flanagan at the GAN Educators, and he had a really great chart on silver that I'm going to post today in the den, and it basically shows what happened during that big run-up that we had into that March 25th high that we were talking about. It was a 493% move in silver in just 2.5 years, and it equaled the one that happened in 1980. The same thing occurred. In other words, what happened in 1980, 40 years ago, repeated itself over again in the silver, and it looks to me like, silver is headed to the downside. The question is whether we're going to rally up to that $39 a barrel level, $39 an ounce level, to see if, in fact, we get to that level. But this is what we're looking at, is these longer-term cycles are what really moves the market. I mean, the market manipulation theory only works for a very, very short period of time. I know we like to think that everything that the Fed does is sinister, but frankly, I'm not of that opinion. I think some of the things that they do are, not in our best interest, but most of the things, try to keep our economy moving. Remember, the Fed is owned by the banks. It's not owned by the federal government. So the banks have to keep everything working, the best they can. The Fed is not a government institution. I hope everybody understands that. It was formed in 1913. It hadn't been around for 40 years because Andrew Jackson, disallowed the Fed, back in the 1860s, right after the Civil War, and we didn't get it back until the creature from Jekyll Island reappeared on December, it was actually Christmas Eve of December 24th, 1913. And, someday it'll probably be taken away again, but believe me, central banks is where the players are, folks, because that's what moves the money. We'll have to see exactly, how it pulls out. But the silver chart that we're talking about still looks very bearish. The open interest has not come back into the silver market yet. The volume is dropping quite a bit. Gold's had a really good rally. Silver rallied a little bit. It's rallied about $3 an ounce off the bottom at $33.50. That was the 786 retracement that we talked about at the end of June. And so this is what we're looking at, is to see if we can get a much larger price swing move in silver, up to that 39. Because if we can get it silver above $40 an ounce, then it has a chance to attack the old high at 49. That's what we have to, keep an eye on, and that's what we'll be watching for, that move if we get a move above 39. And of course, silver is only trading around 36.5 right now, so it's going to take a while before it takes out that high. Frankly, I think the focus that we should have for the commodities are in the grain markets, is to buy the wheat, buy the corn on a pullback, and to try to see that. Rice is telling us that there's a food shortage coming because it's had a huge move. It's the number one staple food in the world because most of the world eats rice. They don't eat bread. And, in fact, most of the people don't even know what coffee and chocolate are. So these are other soft commodities that really don't have much effect on commodity prices because they're so insignificant. But rice is significant because that feeds the world. And we have to watch what happens. It's a pretty good contract to trade. The open interest is nothing, like corn, but corn is our big product here in the United States. It's by far the largest agricultural product that we have. So we'll have to keep, our eyes open to buy corn if it backs off into that 590 level with a stop below the 580 level. So you'd be a farmer for, around $500, which is certainly acceptable, in my opinion. I wanted to mention one more thing about the gold market because on yesterday's show we were hitting the $1,529 an ounce level, which was the 618 retracement of the last move down from May through June. And as long as this level went above it by about $5, that's about the maximum gold ever goes above or below a fib point. And $5 on $1,540 is really not very much on a percentage basis. So we need gold to get above 1535 to 1540 to see if it's going to make another leg up. It's been bullish all along. The gold-silver index that we highlighted about a month ago in the newsletter has held that 191 level and has exploded out of there, with a lot of strength, and especially with the stock market moving up like this, these gold and silver stocks have been pulled up also. So that's another reason why the market for gold, looks like it wants to go higher. That was the first tip-off, is that, the gold and silver stocks finally stopped going down. They had been, so very, very weak for so long, and then all of a sudden, in the middle of June, right on the date of the full moon, we and also that was the lunar eclipse. We had this tremendous move from the 190 level, and now we're trading at 209. So we've moved better than 6% in this particular index of the gold-silver index. Then, and that's a very, very strong move in a matter of just a few weeks. We don't get any resistance until about 216. Which would be the 618 off of the April high. So it still looks bullish. If we get a little bit of a pullback here, 3 or 4 days quietly, I'd be looking for a place to buy some of these. So if you have any questions, you can call in at 877-927-6648. And right after this break, I'll be back to wrap up the show.
Some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. You've heard Bud Rolfs give his expert technical analysis of the stock market on the radio. Now you can have his superior trading advice and his best stock picks delivered right to your desktop every week with his newsletter, The Torch. Using his own trademarked Warpath trading system, Bud will help you to increase your odds of making and saving money in the markets with powerful stock selection, stock analysis, and trading plan strategies. Published every Monday morning, each issue of The Torch features full-color charts in an easy-to-follow format. You will also receive not only the big picture of what's going on in the major markets and critical sectors, but also featured stock picks with complete trading plans and technical setups, as well as the Subscribers Corner, where Bud analyzes stocks submitted by subscribers. Visit TFNN.com today and receive your 2-week free trial of The Torch. That's a $75 value. Sign up now and make sure you receive all the great market analysis and winning trade ideas in every action-packed issue of The Torch from Bud Rolfs. Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Now, back to the Futures Hour.
Okay, folks, we're back at the 877-927-6648. If you have any questions, someone asked me a question during the break about the fact that the gold made its bottom on the new moon the new moon and solar eclipse of July 1st, and if that has any significance. Well, of course it has significance, but we were using the new moon in relationship to the market. Now, the new moon, full moons also work with the gold, because gold is a very emotional market, and since these emotions that we have, like Dr. Al Larson talked about last Thursday, is that the fact these are based probably on some types of ions that are in the air that make some type of electrical charge, that some charges are positive, some charges are negative, and that's what makes us either bullish or bearish. I'm not sure the answer to that, and no one knows either. It's just that the statistics behind it show that, yes, there are some really strong factors that make gold act the same way that we have on some of these others. You remember when we had the big new moon that we had back on May the 2nd, that was the actual high in gold at 1575 on that same day, and it bottomed on the new moon just recently at 1480. So there's some real significance there. And if you go back and look and study maybe 200 or 300 of these examples, and you need at least 100 samples in order to be statistically accurate. And if you go back, and since you have You have 12 new moons a year, and if you look at 10 years, you've got 120 samples, and if you have 100 years, you have 1,200 examples. And if these are better than 75 or 80% accurate, you have something that is really, really positive. We got a call from John in Philadelphia. Are you there, John?
Larry, good morning to you.
Good morning, John. How are you today?
Good, thanks. By the way, thanks for last week having, is it Mr. Larson that you had on?
Dr. Al Larson, yes.
Yes. Thanks for having him, and thanks to him as well.
Good. I'm glad you liked it. A lot of people downloaded the book, so he was quite happy about that. Even though it was free, he still likes to see people enjoy his work.
Say, Larry,
yep.
I'm sorry I tuned in only halfway through the show, so you may have touched on this. But my question on the euro. This morning the euro hit a little low, just over 142, and has bounced a bit. I'm wondering if you see any intermediate-term trade setting up here in the euro.
Well, John, I was watching that when it was occurring because I was trying to buy it at that 142.12 level, and we only got down to 142.19, so it missed the exact fib point that I was looking at of 786, by 6 pips, and we've rallied, well over 100 pips since that point, and that's all it is so far is a rally, but we've been oversold since July 1st. We've come down 4 days really hard, so to have a snapback rally like this is not unusual. The thing is, we've had 3 higher bottoms now in the euro, one on the full moon of June the 15th, and then we had another one on the 27th of June. We had a bottom, and then we had the top on the full moon, the new moon of July 1st, and now we backed off a little bit. So we're in this really tight triangle. So we could come out of here. If we can get above 146, the euro will soar, but frankly, we've had lower tops and lower bottoms for quite a while now, so I think the trend is still lower, and I would have to, wait and see, if we're going to get to that level. I would just have a little patience here and, still wait to see if we're going to make that 142 on the downside.
Hey, thanks so much for those thoughts, Larry.
Okay, thank you. The euro is quite interesting, folks, because, wow, I can't believe that the time has gone so fast. Time flies when you're having fun, I guess. Anyway, have a wonderful weekend. I'll be back on the show on Monday, and we'll see where the market stands, and we'll see what the next lunar cycle and the other cycles will bring. Thanks for joining us today.